Good morning, Dr. Yusuf. My name is Laulid Wei. Welcome to Group 10's Financial Management presentation. Today, we will explore the financial performance of Matrix Concepts Holdings Berhad from 2021 to 2025, alongside our forecasting results for 2026. Thank you.
Hello, my name is Muhammad Izzuddin bin Muhammad Saimi. My metric number is H24834229. Now I can present about the company background. Matrix Conservative has been founded in the 1996 as a traditional property developer. However, the company has undergone a significant transformation, particularly after being listed on Bursa Malaysia in 2013. Today, MCHB has evolved from a simple building into a desegregation community builders. This strategy includes liberty, hospitality, and wellness access to create a competitive advantage. The portfolio now includes first the Tampak Country Club, a premium 6.33 as a wellness facility. Second, Gisora Boutique Business Hotel, providing high-quality hospitality for modern travelers. Last, Expat Sendaya, an extreme sport tourism hub included the intro active living portfolio. This shift isn't just for show, it's a strategic move to protect long-term financial viability has ensured the company trade in a post-COVID economy by diversifying its revenue stream. Thank you.
Good morning, Dr. Yusuf. I am Laulid Wei. So today I will present liquidity and activity ratios of our company. Our current ratio safely stay above the 2.0 benchmark, peaking at 3.40 in 2024 and closing at 2.83 in 2025, proving this liquidity is real, and our net working capital consistently maintain a massive surplus well above 1 million ringgit Malaysia, that is 1,069,654 ringgit Malaysia. Our quick ratio grew steadily to 2.26 in 2025. Furthermore, our cash ratio hit an absolute height of 0.75 in 2024 before normalizing to productive 0.32 in 2025 as the management deployed excess cash into active expansion. Our inventory turnover significantly from 0.91 times in 2021 to 1.96 times in 2025, slashing the average age of inventory down to 185.88 days. Most importantly, our average collection period dropped drastically from 252.57 days to just 86.81 days in 2025. By collecting cash within 86 days and balancing our average payment period at 74.50 days, our company perfectly optimized its cash conversion cycle. Thank you.
Assalamualaikum Dr. Yusuf.
Okay,
My
my name
name
is
is
Nikran
Muhammad
Chokminhui, so
Atif
I'm going to
Darwish bin
present
Malzaid.
profitability.
I will continue
MCHB
about ratio
enjoying a
analysis
strong
part
margin, consistently
solvency.
maintaining a gross
To fund
profit
this
margin above
expansion, total debt surged
43%
from
and a net profit margin
567,000
above
ringgit to over
18%.
1.03
However, we
million
observed
ringgit
a
in
drag effect in
2025,
2025
while this
and
caused the
total
interest
asset expand
coverage
massively
ratio to
to
drop from
RM
64.8 times
3.24
to
million, which
22.8
outpaced profit
times.
scaling.
It remains
This
at a
caused the
very safe
return on
level.
asset
Thank
ROA
you.
to dip
Assalamualaikum Dr. Yusuf. My name is
8.95%
Muhammad
and a
Atif
return
Darwish
on
bin Malzaid.
equity
I will
ROE
continue
to
about ratio analysis part
9.71%.
solvency.
Thank you.
Assalamualaikum, my name is Muhammad Ashab bin Fazil and metric number in H2483587. Despite the risk, MCHBS structure strength holds the Altman Z score even after 2025 leverage spike. Stay well above the safe zone at 3, severe bankruptcy risk is effectively zero. Our executive blueprints focus on 4 pillars: cost preservation, asset optimization, leverage, discipline and revenue diversification, especially integrate team wellness and hospitality to reduce reliance on pure property development. In short, MCHB is resilient, profitable, and strategically positioned, but must effectively manage costs and asset efficiently to sustain returns. Thank you.
To Dr. Yusuf. My name is Wilson Liam Anak Sendang. My metric number is H24A 2928. Today I will walk you through our group forecast for metric concept holding Berhad heading into 2026. First of all, we have stress tested the business against a conservative scenario, which is sales contracting to RM 1 million, down to RM 1.15 million in 2025. This lets us test margin resilience under pressure. Even with the low sales, there are two vulnerable stands out, which is first, any further sale decline would demand alternative revenue streams. Secondly, is cost inflation, which remain a real threat to profitability unless strictly managed.
Assalamualaikum Dr. Yusuf. I am Andi Muhammad Hanif and I'll start for our future financial outlook. So based on our 5-year analysis from 2021 to 2025, Metric Concept Holdings Berhad is financially stable and operating effectively. On liquidity, the company maintained a current ratio and quick ratio above the company standard. This also proves that the company has enough liquid assets to meet their short-term obligation. Net working capital remain above 1 million ringgit, which indicates strong short-term and financial stability. On profitability, the company maintained stable growth and net profit margins over the next 5-year period, the current 5-year period. But however, return on asset and return on equity have also decreased because assets and equity grew rapidly. This means that while the company is still generating profits, its ability to efficiently use the assets and shareholder funds has decreased slightly in recent years.
Assalamualaikum, I'm Muhammad Adam. I will continue the analysis of activity ratio, solvency, and bankruptcy risk for metric concept. Firstly, activity ratio should improve operating efficiently. The inventory turnover ratio increased, while the average age of inventory decreased, meaning property were managed and sold more quickly. The average collection period also dropped by 2025, showing faster customer payment. After that, in terms of stock, the company remained financially stable with a low-risk financial distress. Lastly, the ultimate Z score remained above the safe threshold of 2.99, indicating very low bankrupt risk. In conclusion, Metric Concept remains financially strong and stable.
Assalamualaikum to Dr. Yusuf. My name is Muhammad Zikri and I will continue for the strategic prescription and the final verdict. For the 2026 forecast, we conducted a stress test. Sales are projected at RM 1 million, which is lower than RM 1.15 million in 2025. Here are strategic prescription recommendations for the company. For the first pillar, the company must continue applying best practice to manage costs to preserve profit margins. For the second pillar, the company must maximize the efficiency of asset used to improve return on asset and return on equity. For the third pillar, the company must monitor borrowing more closely to avoid becoming over leveraged. For the last one is the company should diversify revenue source by developing additional hospitality, wellness, and tourism business. For the final verdict, Matrix Concepts Holding Berhad demonstrates strong financial performance. The company has healthy liquidity, steady profitability, improve operational efficiency, and low risk in bankruptcy. With continued financial planning and efficiency cost management, Matrix Concept will maintain its competitive advantage and achieve long-term financial sustainability.
Thank you. Now I will explain the next two parts on this slide. Third, we have strategic community building. This means Matrix Concept does not just build house and sell them for profit. Instead, they focus on building a real community. They build things like the Di Tempat Country Club to make life better for the people living there. Finally, for operational excellence, it means the company runs its business very efficiently. They can turn their house and inventory into the cash very quickly. This provides that their daily business operations are healthy and successful. Thank you.
Of finance is fully transparent and